Hello everybody and welcome to this video where we'll be running over the top 4 robotics and artificial intelligence ETFs. So this video will be slightly different and is following the most recent video that we have launched around the comparison of mutual funds, index mutual funds, ETFs and stocks. We really urge everybody to check out the video. Here you will find a link. Because it will give you a great understanding of the differences between the ones and also give you an indication which ones suit you the best. So let's jump into today's 4 ETFs. The first one we have selected is ARKQ, ARK Autonomous Technology and Robotics ETF. This ETF follows under the portfolio of ARK Invest, which is a very much hype company these days. They were the ones calling the Tesla boom before it happened back in March, and they have had great results this year. This specific ETF invests at least 80% of its assets in companies that are relevant to the fund's investment theme of disruptive innovation, which means robotics, 3D printing, autonomous technology, autonomous vehicles, drones, etc. The next one we have here is Robo Global Robotics and Automation Index ETF. This one tracks the Robo Global Robotics and Automation Index, and the fund will invest usually 80% of its assets in relation to Robotics and Automation Index. However, the fund may invest up to 20% of its assets in investments that are not included in the index, but which the advisor and sub-advisor believe will help it to track the index. So it has some flexibility in that sense. The next is BOTZ, Global X Robotics and Artificial Intelligence ETF, which tracks the Index Global Robotics and Artificial Intelligence Thematic Index. The fund invests at least, again, 80% of its assets in relation to that. So they also have 20% where they have some flexibility. The last one is IRBO stock ticker, iShares Robotics and Artificial Intelligence ETF, and this one tracks the New York Stock Exchange fact sheet Global Robotics and Artificial Intelligence Index TM. The fund will in general invest at least 90% of its assets into this, but it has flexibility to invest 10% in assets in certain futures, options and swap contracts, cash and cash equivalents. So the difference between these 4 ETFs is that ARKQ in general is a more active investment ETF where the fund manager has more freedom to select which companies he wants to invest in, while as Robo, BOTS and IRBO are more passive investment types. However, I would say they all have some flexibility because only 80% or 90% needs to be invested in companies in the index, and the rest the fund manager can decide. But there's no doubt that with ARKQ they have more control in what they want to invest in, and you have less transparency as an investor than what you will have in the 3 other ones here. So first we can just take a look at the asset under management by these companies, and we can see all of them are relatively small. It goes all the way from 0.18 billion with RIBO all the way up to 1.8 billion for BOTS. So again, relatively small funds. We can also take a look at the beta, which just shows the volatility in relation to the overall market, and we can see some of them are more volatile here and BOTS are a little bit less volatile, but in general they are not differentiating too much from the general market. The next one is to look at the median bid-ask spread, which shows the difference between highest price buyers willing to pay and the lowest price that a seller is willing to accept. If this number is very small, it will show that the ETF is liquid and there's not a big difference between what the buyer wants to pay and what the seller wants to get. However, when you have higher numbers like the ones we are seeing here, 11% and especially 32%, there's a big gap between the two, and that shows that those funds are less liquid than the one of bots here, which you see it only has 3.48%. You can also take a look at the average volume, which just shows the number of shares that is traded on an average per day. And we can see in general, not that many shares are traded. However, it is still relatively okay overall. The beta tells a little bit about the risk in relation to the general market, but to get a more detailed understanding of the risk profile of these ETFs, it is also important to check the top country holdings and see where the exposure is, whether it is diversified or very focused. So if we take a look at RQ here, we can see that it's heavily focused on the United States and China, but it also has a few countries like Belgium and Israel here. While as an ETF like Robo, it's much more diversified. The main country is still United States, but it also has a big exposure to Japan, Taiwan, and Germany. But a little bit more diversified, and it's interesting here because this one focuses more on Japan with around 43%, and the United States only have 34% of the total fund. Last, we can take RBO, which has a mixture between the United States and then Asia with China, Japan, South Korea, and Taiwan. So in general, we would say that Robo has quite diversified in terms of countries, while as the others are a bit more focused on a few specific countries. We then want to dig in and understand the top 10 company holdings and see how big the exposure is to the biggest holdings of the ETF. So if we first take a look at RQ here, we can see that around 11% are invested in Tesla. So Tesla is a big part of this ETF, and that is something you really need to be understanding, because are you interested in investing in a company like Tesla? If you are, fine. If you're not, then you need to consider whether this is the right ETF for you. We can also see they have a quite big position in Xilinx that has just been acquired by AMD. They have JD.com, they have Alphabet, so quite a lot of known names in the top 10. Then we see Robo here. The biggest holding is 1.87% Harmonic Drive Systems Inc. So in general, a more diversified number of companies in this ETF compared to RQ. You can see they also have Nvidia, they also have iRobot, which are pretty known companies to most people. Then we go into bots. You can see here the big holding is Nvidia again. They also have Intuitive Surgical, they have ABB. So when you look at the percentage here of top 10, you can see that this ETF is heavily focused around a few companies. So if you want to invest in this ETF, you should definitely take a deep look into the top 10, because they are the majority of this ETF. Last, we have IRBO, where the biggest position is Pinterest with 1.65%. Again, here it's spread out across a lot of different companies, so it's very diversified. They also have AMD here, they have Nvidia, they have LG as known companies. So again, RBO and Robo seems to be a bit more diversified than RQ and bots. We then want to move in to understand how well these ETFs have been performing, and first we want to look at the tracking error, which just shows the divergence between the price behavior of the ETF and the price behavior of the underlying index that is supposed to track. So we can see here ARK is around 20% away from their own benchmark. Robo from the index that is tracking is 17%. Bots is 19% and RBO is 11%. So quite a big divergence, which is not a huge surprise given these industries, and I would see a much less tracking error if it was supposed to be following, for example, S&P 500. We can also take a look at the price percentage of the 52-week high. RQ is around 10% away, while as the other one is around 5%. If you take a look then at the annual return for the last year, we can see that ARQ has gained almost 72%, and this is really one of the reasons why ARK Invest is being hyped these days, because they have been delivering tremendous return in the past year. However, looking across the board, it looks really well. Robo here with around 21%, 34% for bots, and also 34% for RRBO. So again, all of them has been delivering good results, and it gives an indication that robotics and artificial intelligence are very much in these days, and at least according to me, is also going to be the future. If we take a look at the annual return for 2 years ago, we can see it was much more modest. RQ only gained 2.75%, so they probably didn't beat the general market, while as Robo gained around 9%, 7% for bots, and 18% for RRBO. So if I should differentiate between these ETFs, which are relatively new ETFs, they haven't existed for that many years, you can see the maximum is 6 years for RQ. It is that RQ in some years have been delivering tremendous results, and in some it has been quite a bit more modest. Only 1 year has been negative here with 2.49%. Robo, a bit more inconsistent and not as good results. You can see here 2 years where it delivered quite significant loss on around 7 to 8%. Bots have been more stable and only had a poor year, similar here to Robo, where it had a minus in 15%. And so far with RIBO, they have been delivering really good results the last 3 years, really stable results between 18 to 34%. We can also try to take a look at how these ETFs are trending these days. Are they in an up or downtrend? And one way is to look at the simple moving average, which is just the benchmark of the current price versus the average of the selected range of price for those days. So this is a technical indicator. So if we take a look here at the current price versus the average closing price of the last 20 days, we can see that all of these ETFs are in a downtrend, meaning that today's price are less than the average price of the last 20 days. The same story with 50 days, however, it is above the 200-day simple moving average. No surprise given the corona situation still, but this is an indication that the ETFs are at the moment in a downtrend. Again, not so surprising given the last 2 weeks where the stock market has been hitting hard based on both the presidential election in the US, which is upcoming, but also because lockdowns are coming back in connection with the coronavirus. Last, we thought it would be good to just have an understanding of how well an investment these ETFs would have been if you had invested $10,000 1 year ago. So if we first take a look at RQ, we can see that they had an ETF performance of the 72, and we have the other ones here. Then we need to consider that they paid a dividend yield. RQ didn't pay anything, but both Robo, Bots, and RBO are paying around 0.32%, so nothing huge. Then it's really important to check the total expense ratio, which just shows the annual ETF cost that is taken from your account to pay the fund's total expense. So that needs to be subtracted from your return. And that will give you a 1 year return of around 71% for RQ, 21% for Robo, 34% for Bots, and around 34% for RRBO. So again, had you invested $10,000 1 year ago, you would have gained the best result by putting it into RQ, followed by Bots, RBO, and Robo in the end. If we do a similar exercise for the last 5 years, we cannot have any indication on Bots and RBO because they haven't existed for 5 years. So here we are benchmarking RQ and Robo, and again we can see by far RQ has provided the best return, more than 100% above Robo. So again, if you invested 5 years ago $10,000 in RQ, you would today sit with around $41,000. Obviously not considering taxes, but just from a pure net result perspective. Last, we just thought it would be interesting to benchmark the performance of these ETF versus S&P 500 ETF, and we'd selected the Vanguard here. So you can see the blue ones here are the returns of the ETFs that are investing in robotics and artificial intelligence, and the red here is the return on the S&P 500. And as you can see, for the last year, they have by far surpassed the S&P 500. They have been much better investment. If we just take 2 years ago, it was only RBO who did better than the S&P 500 index. All the others had lower returns. The same situation 3 years ago, where the S&P 500 ETF were better than all the ETFs that were investing in robotics and artificial intelligence. 4 years ago, they were doing better than the S&P 500. So it's a little bit, it depends on the year which one is performing the best. There's no doubt that the ETFs that we have run over today overall has performed much better than the S&P 500. But it's really important point for us to illustrate that it doesn't mean that they're the best every single year. There's no guarantee. And as you saw in our video, research tells us that over the long term, S&P 500 has performed better than any type of at least active managed ETF, which would be specifically RQ, although the others to a certain extent also would fall under that. So again, it's just to note that these ETFs have done really well, but it's not a guarantee that this will continue in the future. Alright, so to sum up today's video, we first looked at the underlying index assets, and for RQ, it was their own internal benchmark, while as a Robo, Bot and RBO needs to follow a specific index in general. On the risk side, we believe all of them are medium. They're definitely not low risk, however, they're not extremely high. On the liquidity part, we will think that RQ and Robo is around medium. We looked at the bid-ask spread, which was around 11%. For bots, it was only 3.42, so liquidity is relatively high. And for RBO, it was a lot, 32%, so it's quite low liquidity, which is something you need to be conscious about. On the country diversification, medium for RQ, high for Robo, a lot more diversified. And for bots and RBO, it was again around medium. On the stock diversification, RQ medium, high for Robo, it was a small percentage in the top 1 holding. For bots, it was medium, very similar to RQ, maybe even a bit higher. Lower diversification in the sense that the top 10 holdings were accounting for a big part of the total fund, and RBO was high, similar to Robo. But again, all the companies, although there are similarities, they are investing in quite different companies, so they are not comparable 100%, even though they are following the same area. Next, the tracking error part, which is not too important here, but the best one was Robo, followed by RBO, Bot and RQ. The trend, at least short term, all these ETFs are in a downtrend. They are still in an uptrend from a long-term perspective. On the total expense ratio, RBO had the lowest, followed by Bot, RQ and Robo in the end. On the performance for the last year, RQ done the best by far, followed by Bot, RBO and Robo in the end. And performance for 5 years, we only have RQ and Robo, but again, RQ was doing the best of the two. So to sum up, would we invest in any of these ETFs as of today? If you're just looking for a long-term perspective, we wouldn't be cautious about investing in any of these ETFs, simply because of the reason that we believe that the industry related to robotics and artificial intelligence will keep on growing in the future, and we think that there will be good returns to be had. However, should you go in today, we would perhaps be a bit more cautious because the stock market has been very volatile. It may continue to be so, at least for the next week or two, in relation to the presidential election. And after that, it will be a bit depending on how the coronavirus develops. However, at least on the other side of next year in Q1, we believe that things will return. And once there is a cure, there's a vaccine, we think this will have a positive influence on these type of ETFs as well. So again, all of them are recommendable. In the end of the day, it's more of a preference whether you want to have more focus on, let's say, RQ, where they have focus on United States in general and also a company like Tesla, or whether you want more diversification through an ETF like RBO. You also need to consider, at least for if you're a short-term investor, the liquidity of these ETFs, which are not perfect. But if you're investing with a long-term horizon in mind, again, this doesn't really matter too much. And again, we think you could invest in all of them and you will get good returns. That was all we had for today. Please remember that we are not professional financial advisors and this is only done for entertainment purposes. We hope you liked the video. Please subscribe for future content. Give us a like, provide us comment if you have any suggestions for improvement. Besides that, there's not much more to say than have a good day and stay safe. See you next time.